A very good afternoon, good morning, Carolyn, Konstantinos. Welcome. Hope you both had good weekends. Just going to give folks 30 seconds or so to sign on in, then we'll get stuck into the session. Hi, Carolyn. Good afternoon, Ryan. Very good to see you. Hope you had a good weekend too. Oh, very good. That's a nice weekend. I was helping my children finish off their LTA tennis coaching qualification. So I was helping with the tech side and running around in the group, playing tennis very badly. Rugby's fun. That's a great game to watch as well. All right, folks, let's get stuck into the session. So let's stick with the big picture. Look at short-term interest rate markets. This year, the Fed's expected to cut 3 times. Currently, there's no chance of a 50 basis point rate cut in the September meeting, and it's a 100% chance of a 25 basis point cut. Look at the run of data we've had. Weak headline NFP print, a bigger revision downward from the Bureau of Labor Statistics on the annual non-farm payroll number. We've had initial jobless claims spiking higher last week. We had the University of Michigan print coming in below market's minimum expectations, and those 5 and 1 year inflation expectations, although they are politically driven, both of them were coming sharply lower. On top of that, we've got trueflation moving lower as well. So what do we see? We see a weakening labour market, and we don't see a tariff-induced inflation spike. We saw PPI moving sharply lower, CPI benign. So the fears that there's a tariff-induced inflation bubble emerging have been pushed right to the back of traders' minds. And yes, that's right. Sorry, Carolyn. They're expecting to cut interest rates 3 times by 25 basis points. So a quarter of a basis point cut is expected 3 times this year. And then if you go to the summer, what markets are expecting is nearly 5 interest rate cuts by the summer of next year. So what we're doing is we're embarking on a rate cutting cycle. And why? Hey, Najam, that's why we've been seeing the dollar, right, move lower. Do you see this dollar moving lower? Right, in anticipation of that rate cutting cycle emerging. And that's the major narrative that's going on. So dollar weakness is the predominant story. And the fact that the Fed is cutting interest rates, right, is supporting equity markets higher. So what do we see? We see the continuation of this current theme: equity markets higher, volatility lower. We see commodities higher. I'm annoyed that I closed my silver longs too prematurely, but I got my copper longs still going, and they're moving nicely in the right direction. Gold still moving up. Flag pattern there. Looks like it, doesn't it? So that looks like a nice flag pattern that's going to break out to the upside, with not a consolidation, maybe is a better way of putting it, but in this trending market, that looks like it wants to go higher. And that's kind of the major narrative. Now, on Wednesday, we've got the Fed meeting. So that's going to be the major focus for markets. And we're seeing dollar weakness continuing into the Fed meeting. And that euro dollar long bias that I took from Friday is still very much in play. So my euro dollar longs nicely in profit now. The yield spread pushing higher. We found support at this level, that bullish engulfing bar. We've got this rejection again that we got on Friday. I got in down at the big round number 700-ish. Stops just below the lows, and we moved up to the daily highs. Okay, and I'm looking for this to keep moving into the Fed meeting on Wednesday. So euro dollar upside makes sense in the FX spot market. Also, Oracle looks very interesting for a flag pattern. You see here, looking for a breakout. If we get a break above those highs and we see on balance volume pushing higher, I got a little price alert at the 297 region. So looking at Oracle. Nvidia shares were down, which is weighing on the Nasdaq in early trade on the fact that they're meant to be broken some kind of what was it, copyright law. Let's see what China says. Preliminary probe finds Nvidia violated anti-monopoly law. Thanks, Najam. I just corrected myself. Yeah, so analysts are saying that this could be for more leverage during the Chinese trade talks. Trump came up early in 140, not 140, 115, saying that the meeting between US, China, and Europe has gone very well. Trump says he'll be speaking to President Xi on Friday. A deal was also reached on a certain company. So sentiment is quite positive out there, right? Just looking around, what's the general mood of the market? We've got equity markets higher, volatility lower. We've got bond markets being bid, which is good in expectations of Fed interest rate cuts. We've got dollar lower, that's boosting commodities, gold, copper, silver, all generally supported by that weak dollar. We've also got the dollar weakening towards that swing low of mid-September, and that's lifting the majors. You can see the pound is the strongest currency alongside the euro, benefiting from that weak dollar. The dollar's the weakest of the pack. So it's a kind of risk positive open. We've got China-US trade talks ongoing, and in terms of data, very little data coming out. So let's have a quick look at the ES. So looking at the ES, what we can see here is buyers, right? Trapping sellers there on the 1 hour chart, and we're breaking above the value area high on the weekly chart. So this is now big support area. Inventory, positive. Looking at the 15-minute chart, we had sellers trapped down here, right? Any retracement to that standard deviation, just looking for a buy, okay? Moving there, that's the buy zone. It's quite straightforward and quite simple. If that level breaks, and looking for a buy zone for the VWAP. So looking for a buy from 6603 or looking for a buy 660. The first standard deviation, because the price was moving higher, was, where is it? Up here, all the way up here, 6650. So we've got a long way to that standard deviation, and the market's clearly trying to break out. So what's the market telling us? It's telling us that it wants to go from balance to imbalance. And that's the trading environment we're in. Quite straightforward, quite simple. So then we're looking, just buying these dips to try to find opportunities for trading. As it stands, like any move to that first standard deviation is suitable for buying. That's what we're looking for. So nice and straightforward. That's all there is really out there at the moment, folks. I'll be keeping an eye on that pre-market. If we go down there pre-market, I'll be happy to buy. No problem, as long as we get something trapped on the tick chart. Yeah, so something trapped on the tick chart, I'll be happy for that. Okay, we'll try along if I get above these sellers. So if buyers take it up above these sellers, I'll try a little long there. Just a very quick one if I can. Quite extended. Right, go for a quick long there. You've got buyers trapping those sellers. Taking quite a long time up here. The buyers have trapped those sellers, but it's looking less and less likely that it's going to hold. Just give it a second. Pointer control's trying to hold. Isn't really. It's so those buyers there still just about holding on. I think that's going to be a pulling out. Okay, if those sellers trap those buyers, I'm going to pull out, which they have. So I'm exiting. So I'd like to see it pull back. We'll re-enter against the standard deviation. That's what I'm looking for. So we'll re-enter against the standard deviation if we get down there.